please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Well, look at the market now on fire. The mid-cap index is now at the high point of the day, and the Bank Nifty, of course, up about 116 points. The Sensex, well, 36,000 could be here for all you know, maybe tomorrow. The way the market is going, 35,788 now on the Sensex. Ashwini Gujral and Mitesh Thakkar with us to tell you what to buy or sell today for a reverse trade tomorrow. Ashwini, you go first. Thoughts on the index first, and of course, stock ideas.
See, I don't think we are looking at the right indices. The right index to look at is probably the IT index. It's up almost 2%. So chances are that IT index will continue to outperform, while Nifty, Bank Nifty will lag, although they will also hit new highs. It will be interesting to see what happens at about 11,000. Often, sometimes these big numbers, they tend to stop the market for a while, because 10,500 to 11,000, that's been hit. Now you could spend some time in this 10,850, 11,000 type of zone, building strength for the next move. But I think IT index is the one which could surprise on the upside. Having said that, I think mid-cap real estate has done very well. Kolte Patil is a buy with a stop of 376, target of 394. BHEL is a buy with a stop of 100, target of 114. And Godrej Industries is a buy with a stop of 628, target of 650.
Okay, more buy ideas. More stocks on the move, by the way. Edelweiss is now spiking higher. There's a move on Just Dial as well, almost a 9% rally going on that stock. And there's another one. Mitesh, let's get your trading ideas as well.
So Godrej is on my buy list as well. Very clearly a good set of signals over there. Buy with a stop at 618 for targets of 660. Smooth up slightly. Try to buy it around 630 mark. And BHL is the other one. We discussed that earlier as well. Keep a stop at 99. Look for targets of 112.
Okay, fair enough. Well, it's Monday, so that means we are discussing mid-cap mania. Right now, the market itself is in a bit of a mania mode. But Nigel, what stock is on your radar today?
Well, the stock that we're talking about is SRG Housing Finance. It was a small cap company. It was listed on the SME, and then in fact it's been migrated to both the bourses. Well, it's had a big run in the last 1 year, so just alerting our retail investors as well. What does it do? In fact, it gives home loans, it gives you loans against properties, as well as some project loans. The largest constitution, though, is the home loan segment. Where did they start? They started off in Rajasthan, and slowly they moved to Madhya Pradesh, as well as Maharashtra, and in fact Gujarat. So that's where they are geographically based. What's the average tenure? They give small ticket loans for around 6 years approximately. So importantly, they give you at a higher rate of interest, but in fact the loan to value, that is lower. For example, if you're taking a 10 lakh loan, if you have a property worth 10 lakh or a shop of 10 lakh, then in fact they're giving you a loan of roughly around 5 lakhs, very approximately. The shareholding pattern, that's something that always excites me. And in fact, the promoter gradually has been buying from the open market. And the second reason, he's increased his stake by more than 5%. Why is that? He had provided some securities as a collateral. That has got converted. So that explains why, in fact, the shareholding now has moved to more than 60%. Also interesting, very small investment coming in from Mr. Ramesh Tamani, only 0.85%. It was a preference issue that was issued close to around a year ago. Put in only 1 crore. Today it's worth more than 2 crores. So that's just an interesting spot out there. In terms of disbursements, it's been quite good. For the first half of this year, they've done more than what they did for the whole of last year. So that's something as well that should come up for you on the screen. Well, you'll say, what's the most important thing though? You'll see that the outstanding loans as well have moved up close to around 125 crores approximately, the disbursements as well. Well, the net worth is around 35 crores. We look at price to book value, right? So the market capitalization is around 300 crores. Then it's at around 8 times. So it's looking a little stretched. But if you compare the outstanding loans, 125 to around 35, that's at around 3.5 to around 4 times. So that's a couple of numbers as well that are out for you. In terms of gross net NPS, it's around 1.3%, 1.2%. So those are at around manageable levels. Well, the average cost of borrowings is very high for them because it's such a small ticket size. No one really wants to lend to you. But that, in fact, has been coming in lower. The net interest margins as well have been falling up proportionately. And where do they borrow from? Well, at one point of time, they were borrowing only from banks. Then, in fact, they've split it up and they're borrowing even from NHB. They've got a certificate as well going ahead. And this is what could reduce the cost of borrowing going ahead. Finally, if you just take a look at what they have been doing, they've laid out an FY 2020, FY 2022 on the website as well as on the BSE. They're looking to grow their book. I think we should get that as well up for you on the screen. They're looking to grow the book from around 125 crores all the way to around 1,000 crores. Whether or not that's possible, not too sure. But in fact, they're looking to provide maximum finance to people in the rural areas as well. They've also mentioned they're looking at enhancing shareholder value going ahead as well. I personally went to Andheri to see that at least, is that registered office existing? Yes, it was there in Andheri itself. But that's the first office that's come in Mumbai. Let's see what happens from here. Rather interesting stock, very small market capitalization that now in fact is at around 300 crores.
Okay, thanks Nigel. Well, these days anything that has housing finance attached to it catches the market's fancy, so it's important to do your due diligence. Here, Nigel went and physically saw whether there is an office or not. It seems to be there in Andheri. Actually, speaking of housing, there's another housing-related stock on the move, and that's Hudco. After a long time, you're seeing a spike there. It's still a far cry from the post-listing highs of around 96, 97. But nonetheless, it's a bit of an active play, at least in the market today. A little bit of a spike coming in. Mayuresh Joshi is still with us. Mayuresh, while on the subject of housing finance, I don't know if you track this company or Hudco, but Group Finance, I just wanted a word, on what you thought happened. This big 30-35% surge and the massive fall today in the stock despite such a buoyant market.
Again, the entire themes will be in terms of affordable housing and what can get actually allocated in the budget towards the Prime Minister's Awas Yojana. I think that's going to be very, very interesting because the allocation done in last budget was also very, very phenomenal. So I think if all screws are tightened in terms of more allocations and more serious work happening on this count, I think a lot of these companies are probably looking at ticket sizes in the range between 10 lakhs to 20-25 odd lakhs. We'll obviously see incremental advances growing at a very thick pace. For Group specifically, again, I think the kind of move that we probably seen and the valuations that it was deriving out of, I think it was out of proportions definitely at this point of time. So I think being very, very selective within this space, we remain constructive on housing finance. But what we really like from a bottom-up approach, the numbers that you just flashed for demand housing, I think a good set of numbers in my opinion. And as the disbursement book grows because of the kind of leverage that they can do on their balance sheet, I think the multiple should increase. And GIC housing is something that we'll continue to prefer on declines in a staggered way. The asset quality pressure should start easing out, and as the loan growth doubles, as the management envisages over the next few quarters and years, I think that will be positively reflected in their return ratios. So I think GIC and Divan housing is something that we'll prefer Surbi from the housing finance space.
It is just up and away. There's simply no stopping this. 10,971 and the mid-cap index up a full 1%. Abhimanyu Sofat of IIFL with us as well. It's a big surge that's underway right now. Abhimanyu, let me ask you for a stock name. I mean, it's tough to figure out what to buy in this market with such momentum, such surge of liquidity. Any ideas?
Yes, so I think so. If you look at the large cap space, clearly I think so Reliance is one stock that one can look at even at this particular juncture. The Geo growth has been remarkable in terms of the growth in terms of revenue, RMS, and we expect the market share to go to close to around 32% by FY19 and relative to earlier expectation of close to 30%. And the petrochemicals segment also doing well, with GRM also likely to do well going forward. I think so. Reliance is one stock on the large cap, which one should look at even at this particular point of time.
Okay, Ashwini, 290 points higher on the Sensex now, and the mid caps now joining in the party. Do you think this mid cap underperformance that we had, we could be putting that behind us?
See, once 11,000 gets hit, obviously, mid-cap rallies will restart. But, mid-caps have had their run. This run probably belongs to the large caps. So maybe once the large caps start to consolidate, money will again sharply move into mid-caps. So I think while select mid caps may outperform, overall mid cap index may not outperform the large cap indices for a bit, maybe a couple of weeks or so.
Okay, so just 200 points away from the 36,000 mark now, and you are talking 30 points away from the 11,000 mark. I mean, it's just moving so quickly, and a lot of stocks getting rewarded. Just some more examples. I mean, good earnings. Vakrangi, for instance, again, that stock is spiking higher and higher. So, Anuj, I mean, should we read this as a lot of the pre-budget cheer? Would you give it more on the earnings momentum? And is it just a matter of time now before these levels get taken out?
You know, this is melt up, Surabhi. We spoke about it, 4 days back. I remember, last week when we were having this conversation that, there's a good chance that this market now has a pre-budget melt up. And there's a good chance that 11,000 happens well before expiry. Now 11,000. What tomorrow morning you should open at 11,000 straight away. I mean, unless some catastrophe happens in the US overnight market, tomorrow morning you would have 0.1% or 0.2% gap up is all you require now to have 11,000. So 11,000 is here. We should. The issue here is for those who have missed out. And again the same point that I keep making. The call on the market that you hear right now that I won't buy at these levels. That's more of hope for a correction. That call for correction in this market is hope for a correction. So many people have missed out. For so many people, it's been a hated bull market because they have not been able to participate. And the market has just, consistently climbed one wall of worry after another. It was what? The Nifty was at 10,500 when we were having that whole, sort of tamasha about, democracy being in danger and all that nonsense was happening. And from that point, we have seen a, 400, 500 point rally in a matter of 2 weeks. So the problem is, do you buy here? Because if you buy here, and with so much momentum, then where are your stops? The 10,500 was the last breakout. At 10,600, 650, the stop was near your trade. But right now, the stop is too far away. That, I think, once again, is the market's message that if you buy dips, you are making a lot of money. Chasing momentum at times can be a bit tough. You will still get your price, but maybe you'll have to wait for that bit longer. But this is a classical definition of a bit of a melt-up that we're having. And the largest stocks, Reliance, TCS, HDFC Bank, these sort of companies, you saw that happen in the US as well. Stocks like Amazon, Google, Alphabet, Facebook, they started to add this kind of market cap on a daily basis. India's 2 or 3 largest companies adding this kind of market cap now on a daily basis. So really part of a bit of a melt-up happening right now.
Yeah, absolutely. I mean, big stocks on the move. Indiabulls Housing Finance also in almost that 5% club now. Actually, that's the question, from a trader's perspective. Let's just talk about the next 1 or 2 sessions. With large caps moving the way they are, I mean, a 5% on TCS, 4% on Reliance, are you better off trying to trade large caps next 1-2 days? Or should you still look at some of the mid-cap ideas? Because even there, I mean, something like an Edelweiss, for instance, is on the move. Biocon is on the move.
See, there are horses for courses. If you see today, the IT index is up 278. So look for mid-caps in the IT index. Mid-cap real estate is doing extremely well. So get in there. So look at things which are just beginning to move, like ICICI Pru. There are several stocks which are coming out of large corrections. The other point is people who are feeling missed out, you only missed out, you haven't died. Because if this market corrects 10%, the mid caps will be battered out of shape. So just because you have missed out, so you jump in on at 11,000 is not a sensible idea. All markets will correct. One day they will correct. So if you missed out, wait for the next crisis, wait for the next 10% correction. Before that, if it goes to 11,500, so be it. So that's the advice. But definitely the sectors which are coming in out of big bear markets, IT is not a rupee play. Nothing moves like this because, rupee has fallen 20 paise. So I think IT is where the great opportunity is, and which may not correct even if the market corrects. Other sectors which have gone up 10 times or 15 times, they are likely to correct much more.
Only problem is, Ashwini, that those who are waiting for that correction, they've been waiting. It's been a painful, long wait, watching the screen just go up one way steady, and that's on the higher side. Anyway, Anuj, we've got less than a minute to go. Another record day. What a start to yet another week. I mean, January so far, 4% up.
Yes, and you know what, we have now, for first time, I think, two companies with market cap of more than 6 lakh crores. In fact, it looks like there's a bit of a race on between Reliance and TCS. There's a bit of a, you know, upmanship game happening between maybe Tata's and Ambani's. Reliance market cap 6.14 lakh crores, TCS market cap 6.1 lakh crores. So both neck and neck. I think that really has been the most fascinating story of the day, which I think not too many would have noticed, because the third one after that is HDFC Bank with 5 lakh crore market cap. So only two companies in 6 lakh crore club, and both of them really surging together, and both of them were really your stocks of the day. I would want to see the delivery stats in both TCS and Reliance, both ending about 4% higher at this point in time. Of course, apart from that, you had other big movers as well, like an ONGC, Indiabulls Housing Finance, Axis, Tech Mahindra, Larsen & Toubro, UPL, Kotak, Tata Motors, across the board. There was one pain point today, two actually. One is oil and gas, HPCL, GAIL, both these stocks were down, and of course BPCL as well. And HDFC, that stock corrected a bit, 2% down on that stock after hitting a lifetime high. There was a swift move on the downside in HDFC, which really was quite interesting, Surabhi.
Yeah, well, that's the large cap story. Mid caps don't want to be left behind today. There's a great move in a lot of the NBFCs. There's been a solid NBFC rally once again today. So M&M Finance about 4% higher. Edelweiss is going home with gains of around 3-odd%. DHFL on decent numbers, again about 2.5% higher. Then we are also looking at an L&T Finance, again about a 3% up move there. So good day overall for NBFCs. And beyond that, I mean, you can look at anything. Alembic, look at that one stock. We're talking almost 6% up. Just Dial 8 to 9% higher. BHEL 7% on the higher side. So, you know, some big sort of moves coming in over here. And then the spirits stock, obviously, there's simply no stopping that rally. Radico has put on another 6.5% today. Let's get UB. There you go, 5.5%. United Spirits will come up for you as well. That one has also seen some decent gains today. So, pretty good and all-round performance. If I talk about some of the other major movers, Vakrangi can be counted in on good results. Godrej Properties, Ashwini was making the point about mid-cap real estate. I mean, look at the move here, 10.5% higher. Jubilant Foodworks, another 8.5% on that side. GE Power, a couple of these power and capital goods stocks actually got excited in the second half, and that trend was evident on a GE Power as well. So this is what we are talking about. Parag Milk, 6% higher. HOEC, good results, 9% higher. It's really a long list of winners. Let me check if there's a noticeable loser. Obviously, Gru Finance is going to be one of them. And Dwarikesh Sugar, not the best of earnings. So about a 9% decline there. But what a day, Anuj. 1% up on the mid-cap index.
Oh, yes. Phenomenal move. Abhimanyu, so let's talk about some of the stocks where we have seen some, big earnings reaction. The likes of Jubilant Foodwork, for example. As a house, do you track it? And what would be your call here?
Yeah, so our target price on the stock is 2,500. See, clearly what you've seen is that the same store sales number has really been beyond expectations at around 17.6%. And with the losses at Dunkin' Donuts reducing, I think the profitability improvement is likely to be pretty robust going forward as well. Though this particular quarter is always a good quarter for Jubilant. I think so clearly what one can see from results is that the urban spending seems to be coming back. If one still is not sure about the rural side, because there are some green shoots there, but at least on the urban side, I think so consumption is coming back, and for that reason, and with the stable kind of pricing and inflation, I think so Jubilant, even at these valuations of close to around 49x, looks a decent play for a 15% kind of a upside from current levels. That is true of many stocks which were, at some point of time they look expensive to you, but once the growth comes, since we are coming from a low base, they'll still look stocks to own at this particular market level. So, as long as the growth is coming, I think so valuation one should not be worried at this particular juncture, clearly because of the base effect. If over next 2 years you find that the growth is pretty robust and then numbers look attractive, then one can go and, hold on to such stocks.
Okay. The other pocket that was a little active today, Abhimanyu, I want to get your thoughts in on this. The move that we've seen on a BHEL, GE Power, Anuj was pointing out CG Power as well. So some of these stocks, the industrial element, we've not seen earnings as yet, but would you be a buyer in any of these?
Yeah, surely. Like, for example, something like a CG Power, you know, we believe that with the reduction in losses of the overseas subsidiaries, it is quite likely that going forward, the earning growth is going to be pretty robust as the company moves from losses to profits. Even in case of other company like BHEL, you know, if the IIP numbers start looking up and we see upward movement in the cycle, power demand is going to be pretty healthy. And since these stocks have been battered a lot, I think so that they could make a tactical buy.
Okay, Abhimanyu, we thank you on that note. Thanks a lot for your time. Well, before we take a break, Ashwini, this phenomenal move on TCS and Reliance today, and you know, two largest companies of India, the two companies with market cap of 6 lakh crores. What's that telling you about the overall state of market?
See, TCS and RIL, the similarity is what RIL did come bonus at 1,000, TCS has done that at 2,800. So after a 3-year sideways consolidation, TCS is now beginning to expand. So if I had to today bet on one of these, I would go with TCS because that breakout is much more younger than the RIL breakout, but it's almost exactly the same. RIL did that after 8-10 years. TCS has done that after 3 to 4 years. Whenever stocks break out of such ranges, definitely something is changing, and I wouldn't be surprised to see TCS at 3,900, 4,000 soon.
India's 3.5 lakh crore restaurant industry has been through tough times last year, right from the liquor ban to the withdrawal of input tax credit as the GST regime originally rolled out. CNBC TV18's Priya Sheth spoke with prominent restaurateurs to understand the viability of keeping establishments open around the clock and, of course, their Budget 2018 wish lists.
Well, it's been close to a month since the Maharashtra government has allowed shops and establishments to be open on a 24/7 basis. While the industry has welcomed this decision, restaurants are still working upon the feasibility of this regulation and are still awaiting clarity as far as this regulation is concerned.
So let's say if I have a shop and establishment registration which allows me 24/7, that's the guideline from the central government, but you now have a BMC to deal with, which is a civic authority, which gives me a trade or a health license to serve. Then I have a liquor license, if I'm serving liquor, which comes under the excise department, which would have their own. And then you have police, which will give their own bit. So I have a feeling for all of them to come together, it seems like almost an impossible task.
So we run 3 24/7 stores in Gurgaon now. I think it's a very viable proposition, and as soon as there is clarity about regulations, we will be the first ones to roll.
Owing to the withdrawal of input tax credit, the restaurant industry has seen costs rise significantly and have made representations to the government for the reintroduction of input tax credit.
We've been hit very badly with input tax going away. We're paying rental on tax on rent, we're paying tax on all our food items, our food costs have gone up, and we've not been able to convert that into higher pricing for the customer. So it's been a bad dent on our profits.
I'm very much in favor of it being reintroduced because the whole concept and logic behind GST is that I want to use vendors who are paying their taxes, because then only I get the input benefit. Without there being input tax credit, again there will be a temptation, if not an interest, of certain restaurants, especially smaller restaurants or standalone restaurants, or maybe even larger chain restaurants, because they're not getting the input tax credit, to again do business on cash.
After going through a rough patch last year, the restaurant industry is hopeful that the budget will throw up some positive surprises for the industry going forward. In Mumbai, Priya Sheth.
Okay, all right. So that's, of course, all that's happening in the wish list with the restaurant industry. Moving on now from the sidelines of the IRMA 2018 event, Lata caught up with renowned economist Nouriel Roubini, who is of the opinion that India should continue with the reforms initiated by the Modi government, and the country should increase the pace of those reforms to accelerate the growth rate itself to 7.5%.
Now, one of the normal debates is, should the government increase the fiscal deficit and invest so that it can give growth a leg up? Would that be your advice?
My advice will be that, first of all, the budget deficit of India is still large at the central level, but also you have fiscal problem at the state and local level, and therefore fiscal prudence is necessary. And the risk is that even if you wanted to do a fiscal stimulus as a way of boosting economic activity, what you have observed in the last few months has been the long-term interest rates in India have gone higher, and have gone higher not just because of global factors, but more importantly because there was a concern that the fiscal deficits are too high. And even with the RBI marginally cutting policy rates, the impact on long-term interest rate has been just to slow down the rise of these long-term interest rates. And therefore, any positive impact on economic growth coming from a meaningful fiscal stimulus is going to be undone by a potential rise in long-term interest rates that's going to crowd out that recovery. Of course, the country is facing fiscal challenges also because when oil prices were falling, that reduction in oil prices were not transferred to the retail level, and it led to greater revenues for the government that were spent rather than saved in the good times. And now that oil prices are going higher, either you increase oil prices to maintain the same revenues, but if you do that politically a year before election, that's not something that's going to be appealing, and therefore the revenue is going to shrink and the budget deficit is going to be rising. That requires fiscal prudence, because otherwise you're going to have increasing long rates. Probably the way to square the cycle that you don't want to cut spending and revenues are falling and you don't have a larger budget deficit will be more divestments of state-owned enterprises and selling to market and partially privatizing some of those assets. That will be good for the economy, and it might be loosening up the budget constraint that the government is facing.
The other problem, the other debate that's constantly in India is the fate of our public sector banks. Up until recently, about 75% of the banking system was dominated by public sector banks. Now, of course, because of partly government policy and partly economic growth not coming good, we've seen them with a large number of bad loans, default loans. What would be your advice to the government of India?
Well, the first observation is, of course, part of the weakness in private, but even in public investment in infrastructure has been driven by the fact that you had a problem, a double problem. One, the banks having a large amount of non-performing assets and loans, especially these private sector banks, and then some parts of the corporate sector being loaded debt with too much debt that they could not pay, and therefore that was a situation that froze the ability to produce and invest. A good news has occurred, as you all know, is this passage of a new bankruptcy law that's going to allow essentially to clean up the balance sheets of the corporate sector, sell some of the assets to other investors, domestic or foreign, and then put them at work. Second thing you have to do on the other side is you also have to recapitalize these banks to make sure that then they can lend again, and that process is occurring. So that over time in the next 12 months is going to lead then to some positive creation of credit growth and ability to do more investment. But the reality is that there is no real strong fundamental reason for the public sector having a significant role in bank intermediation. If you don't want to fully privatize these banks, you could reduce your share from a controlling one to a maybe strategic minority share to essentially partially privatize these banks and give them operational and financial independence so they can pursue maximization of returns, so that they are, even if they are publicly owned in partial term, they're subject to budget constraints and incentive like a private firm. So full privatization maybe is unlikely, but partial privatization and having this independence to pursue what's right should be the right thing to do, and maybe there's a possibility that India is going to go in that direction.
At commodities now, and let's take a look at the latest numbers that have come in from the Indian government in sense of the Indian Rabi crop, which has seen a marginal decline as compared to last year. Well, the last year the number was 62.1 million hectares. This time around 61.8 million hectares is where the acreage stands as in sense of crop sowing as of now. And you have seen the declines actually come in for the wheat, where you have seen the sown area declined by nearly 4%. What actually seems to be doing well, and quite well at that, really is pulses. Remember, that is where the prices have been declining. And within pulses also, which have seen an area increase of nearly 4.7%, it really is about chana, where you have seen sown area go up by nearly 8%. So those really are the numbers that have come in from the government. The pulses area stands at around 16.3 million hectares, which was nearly 15.6 in the year ago. You also have seen that the monsoon last year, or rather this year, the last season that is, was lower from normal by nearly 5%. And while Rabi, of course, doesn't take it directly from that, it is really about the soil moisture content that really decides in sense of acreage and sowing when it comes to the Rabi. Kishore Narne of Motilal Oswal now joins us to talk more about that and the strategies in other commodities as well. Kishore, hi. First of all, the India Rabi crop area, where we have seen a very bullish number come in for pulses, and that is something that the prices will not take very kindly to.
Yeah, of course, Manisha. I think I've been anticipating that in some way that especially some of the non-traditional pulses regions also have started witnessing pulse acreage expanding, especially in the South India, where the rainfall was little low, especially in Andhra and Tamil Nadu, where the typical paddy growing areas are also have been shifted to pulses, where especially chana has got the highest acreage. So already chana prices are under pressure, typically pressurized by the LOPs also. Globally, LOPs have been at a very competitive price. So I don't think there is any reversal kind of thing in chana prices. So I think one should be braced for furthermore downside, especially heading towards the harvest.
Kishore, what is your sense on the price decline? Because we've seen government take a lot of measures in sense of export. Rather, the import duty has been increased for many of those pulses there. But even then, the prices continue to trade below MSP. And as you said, with the kind of numbers that we're dealing with, how much of a further downside are you expecting?
I think, see, most of the things have been discounted. The prices have seen already has been expecting a higher crop coming up. And of course, the early arrivals towards around March 2nd week, March 3rd week, especially from some of the South Indian states, should start pressurizing them. But I think another 6-7% downside could be possible, but we are trading much at a lower band of the prices. Though downside may be restricted, but of course the upside is ruled out till around June or so.
Kishore, coming on the industrial metals as well, because we have started this week on a positive note. While of course YTD, there are a couple of metals which are still in the red, but anything that you're picking up, given the fact that the restocking from China has started, the economic data from most of the consumers has been positive?
I think, see, copper is stuck in a range, probably up on the lower end around 445, 450, and the higher end is 455, 460, so around 10-15 rupees range. So anything close to lower end is seeing some kind of buying. But I think overall there's some couple of metals, especially when we are seeing the restocking demand to come up, especially zinc is again there is a lot of backwardation, which actually shows a huge cash premium. Nickel, again, there is a lot of purchasing coming, especially from the stainless steel sector. So I think these two metals are going to be positive in the coming months or so. So even for today, I'll be suggesting to buy nickel and with targets close to around 830, with stop loss close to around 790. But I think medium term, we can see again nickel climbing back to 875, 900 odd levels.
All right, so near term, long term, there are most of those metals which actually could be climbing on the higher side. Kishore, thank you so much for joining us and giving us your sense on the agri as well as the non-agri space for the near term. With that, it's a wrap up on this edition of Closing Bell.